Jim Cramer is calling for a big push in crypto, saying that we are nearing the 2000 spec territory where the cockroaches are. While at the same time, Jamie Dimon says the cockroaches are ending, announcing a $1.5 trillion fund that unwittingly stokes this huge spec wave. I would say that Jim Cramer's off by just a little bit. Raoul Powell pointing out that crypto seems to be outpacing the early internet adoption at about twice the speed when comparing IP address creations to crypto wallet creations. And all this bantering back and forth takes place while the cracks in the economy are rearing their ugly head. Another subprime auto lender bankruptcy has taken place. UBS warning of the probability of a recession sitting at a staggering 93%. And what's scarier than that is the comment section just showing how out of touch our society really is. This commenter saying we're not in a recession. 80% of countries are already in expansion mode. The S&P PMI is above 50. We need to look at what's really propping these markets up to understand that deeper. The fact is that unemployment claims, I know that we are in a government shutdown and a lot of this is government workers, but they have spiked 121%. This is the biggest since the 2019 government shutdown. Fraud and market manipulation being exposed everywhere, which is leading to the breakdown of trust of the current financial system as we see it. But how does this affect crypto, Bitcoin, XRP? Legislators meeting today on Capitol Hill to discuss this very issue. We're going to talk about this, the charts, and more epic breaking crypto news in this video. But first, you know what to do. Give me a comment, 777 down below if you're feeling bullish, if you're feeling blessed, and you're ready to live your best life. Smash that like button, hit subscribe, and let's run into the video. Unprecedented times and huge fires everywhere is an understatement in my opinion. Everywhere we look and listen, we're seeing fraud, market manipulation being exposed. The Daniela Camboni show here has an incredible interview that I recommend you take a listen to here, talking about the possibility of how this perfect storm could play out. We're not just talking about gold and silver. We're talking about the stock markets, Bitcoin, the crypto markets, and many other economists and analysts pointing out it's going to lead to the breakdown of trust in the current financial system. And where are people going to run when they make that run on their banks? JP Morgan's getting itself into hot water again with silver manipulation. This is not something that is new news. It just keeps on happening over and over again. This has been exposed since 2020, most recently, but it's been happening since as far back as 2008. Even on the crypto side of things, we see Binance blatantly manipulating the market right in front of everybody's eyes. Super easy to track this with Wintermute and on-chain data. And Binance stopped selling for a moment so that Bitcoin could surge up to 114,000 on that gold dump that we saw the other day. But shortly after that, they resumed selling and dumped us right back down to 108. There's good news on that. We'll get to that in a few moments here. But we do see that gold has extended a 2-day loss period here. We're dropping over 8%. $2.5 trillion has left the market cap of gold. We're talking about the market cap of Bitcoin, leaving the gold market cap as a whole. And when in doubt, we zoom out and it does look like gold has ended its bull cycle. The psychology of a market cycle is a really easy pattern to spot, and it's very repeatable. It happens over and over again. It's based on human psychology, which is why it's so easy to predict. But more easy than that is the path that we see in risk assets, which is going from gold into Bitcoin. The path to altcoin season, as pointed out here on this chart. We're still in phase 0, according to this. Gold pumping, gold starting to rotate into Bitcoin. The good news is that if we follow this historical pattern, right, it's not necessarily a predictor of future outcomes, and none of this is financial advice, so don't go buying gold or Bitcoin or XRP or anything because I'm talking about it. Simply informational, educational, and even some entertainment purposes only. But if this pattern does repeat itself, we're going to watch this gold liquidity flow into Bitcoin. It's a massive amount of market cap and liquidity that's poised to do that. It could take some kind of a black swan event for gold, like a country finding a new vein or something like that to push that. And ultimately, we'll see Bitcoin surge. If that's the case, we could expect to see Ethereum, altcoins, large caps, alt season, meme coin season, junk coin season, crap coin season, and everything else after that flow. And when that wave crests, you want it to be landing on your shore and filling up your bags. So are we over or are we just beginning? Well, I would say with 155 crypto ETP filings tracking 35 different digital assets, we are maybe only just beginning. And with a government shutdown, we're not going to see any ETFs approved anytime real soon. It's probably going to take about a month once the government shutdown ends. But we have Solana sitting at tied for first place with Bitcoin with 23 ETF filings since 2024. XRP is right there in the third spot with 20 ETF filings. And we talked about this even in my video yesterday. The demographic that predominantly holds XRP and the utility that is around XRP and Ripple Labs technologies, and who's holding that are people that are more apt to jump into the stock market side of things than they are the crypto market side of things. Generally, we're speaking about people who are Generation X or boomers or in retirement or nearing retirement. Guys, it's going to be exciting to see what happens when these ETFs come out. Some of the signals that are flashing, though, we want to talk about this, right? Again, not financial advice, but that an insider, the Bitcoin whale, this is possibly linked to the Trump administration. No confirming that, but this is the whale that has been shorting and longing right before Trump's tweets, and they have pulled and started closing their short positions on Bitcoin. It does look like we've also entered a new channel to lock in on. Now, this is going to be news coming out of Altcoin Pro University. The link is down below for that. Stick around for a few more minutes. We'll talk about that one in the end. But Bitcoin market update for October 22nd. Despite all the blood and retracement from yesterday, Bitcoin has officially entered a new trading range between 107 and 112,000. We're going to show you guys that on the chart in a moment here. Following the recent breakdown from the mid 114 zone where we met resistance, volatility compressed, setting the stage for the next impulsive move. Are we going up? Are we going down? Are we going to continue to chop sideways forever until the cows come home? For right now, 107 is acting as a short-term support while 112 is capping any bounce attempts. So the key levels to watch, range 107, 112, that's current short-term. Upper targets are 114.5, 117.7, 121. 5 and 122.6. Lower support, we're looking at 101. Guys, you can get the rest of this information at Altcoin Pro University, where you can also get other market updates, altcoin picks, DeFi yield picks, the classes. I can't even speak highly enough about this. But the fact that you've got a 14-day money-back guarantee means that you'd probably be able to blaze through the majority of these classes in your first 14 days. But let's jump into the markets and talk about that again in a moment here. A quick refresh at CoinMarketCap shows that we are sitting at $3.65 trillion for the crypto market cap, total market cap. It's ticking down just a hair from yesterday, as expected. We saw that pump and then dump. Fear and greed index has pulled back just a little bit. We're still in the fear category at a 29, and altcoin season just keeps on chopping in that lower kind of fear zone right there. Fine with me, because it means that the only place we really have to go is sideways or up. There's not a whole lot of downside, and we are looking at the market cap for altcoins pulling back down a little bit, $1.49 trillion for the total market cap. Jumping into the charts, let's talk about that zone right there. And this is going to be Bitcoin. Pull this one up, zoom in a little bit more for you here. So we're talking about this area about 107 to 112, give or take, right? So for me, on my technicals, again, these are my technicals, not yours, so do with them what you will. Hopefully they give you a little bit more of a rounded perspective. This is going to be between two different zones for me. This orange bar, if you're watching this video, which fluctuates between about 104,500 and 107,000, we'll call it, that is a lower area of support that we've been bouncing off of. This red bar in the middle here, this red zone, is about that 109 to 112, 500, something like that. That's an area of resistance that we have not been able to break through, even just barely breaking through it. In yesterday's video, I talked about how gold dumped and Bitcoin pumped. We broke through that area. We needed to what? We needed to bounce off of it and hold support to confirm that bullish divergence and able to be moving to the upside. And you can jump down here to the RSI and see where we had crossed over the RSI moving average, creating that, or just about crossed over, creating that bullish divergence scenario break to the upside, but we rejected. We rejected off of that resistance and we broke back down. Or Binance turned back on their sellers and just started dumping Bitcoin. Whatever you want to say happened. But at the end of the day, it's also on the charts, right? So buy the news, sell the rumors. I don't really care if you're investing from a psychological standpoint versus a technical standpoint. You can figure that one out on your own. But when we look at the charts, it was already there. It was already there for us to see. And I talked about it in that video. Guys, we broke above an area of resistance, but we did not come back down and bounce off of it as support. So that leaves us between this channel of about 107 to about 112. Currently at the time of this video, we're almost about 108 on the Bitstamp chart. But let's move into some of these altcoins and look at Ethereum. And why I say this, because that's where a lot of the money's moving around right now. Bitcoin is the North Star of the market, but the altcoins are still kind of getting a little bit more volume, and that's exciting. That means that people are starting to heat up a little bit. Retail doesn't really seem to be here, but that's going to be an indicator that retail is showing up when we start to see more of the meme coins and the gaming coins and the DAO coins and all the other stuff that's built on platforms like Ethereum and Solana. Again, these are going to both be down about 1.5–2% in the last 24 hours. Solana still chopping in its narrowing wedge, which I am extremely bullish on. And again, the RSI on that one's not really ready to break to the upside and show us that bullish divergence, but it's still chopping between upward trending support, downward trending resistance. Sandbox, I use that as a metric for the gaming sector. It's not really doing anything extraordinary at this point. It might be forming a double bottom. Could be a little bit of a bounce to the upside on that one. And you're going to see the same thing happen with the OG meme coins like Shiba Inu and Dogecoin. You can see they're following all the same exact pattern. That's just institutional involvement at this point. It really just means retail just hasn't really shown up, and there's no favorite horse to take off, so to speak. Even we're seeing this on the newly emerged, more recent meme coins like GigaChad, things like that. Whether they have an ecosystem or a fitness brand or whatever it is you want to talk about, again, don't buy anything because I'm talking about it. It doesn't really matter. The charts are still there at the end of the day. We've seen plenty of projects in crypto with massive amounts of utility and really deliverable products that just have a crap chart, right? And that's just because of spec, right? That's just pure speculation at that point. It just ruins it. But something like GigaChad could be forming that M pattern, that double bottom pattern like you see on the other OGs, but it just keeps trending downward and just trending down. And it is what it is, right? We move into XRP. XRP, I'm not at all worried about. It's forming that double bottom pattern. If we can stay above this 233, 235 level, somewhere in there. Again, we've got a little bit of way to go before we can confirm that we're moving to the upside. We've got to break above 260 on XRP. So it's going to take some kind of a catalyst, whether it's the market moving upwards or some big enough news, right, that it really does start to flood people in to this investment. We will probably experience, once retail shows up, some kind of a supply shock between the ETF listings, institutional accumulation, the massive XRP diamond hand holding factor on that. There's so much of it that's just not available for purchase. It's like silver contracts, right? It's like physical ounces of silver. You just can't get much more of it anywhere. So also, again, just be careful where you buy it, right? If it's centralized versus decentralized, not your keys, not your crypto, it's something to look out for. You hear about crypto hacks and stuff like that. True cold wallets are not connected to the internet, right? If it's on your iPhone, if it's on your Android phone, whatever, it's not necessarily a cold wallet if it's connected to the internet. So you got to be careful with that stuff. But that's XRP. Again, just retracing the same as the rest of the market is. It's trading the same as the rest of the market is because it's marching with the rest of the market. Same thing with XLM, doing the same thing as XRP. Guys, this is where it's at. At the end of the day, we're looking at the possibility of chopping sideways and an ensuing bull run taking place. Volatility in the market is there. The Trump tweets are there. There's a lot of up, there's a lot of down, depending on what happens. And it's just hilarious to me because it just shows that retail really isn't there. And the degens, the crypto degen OGs, like all of us that are just hanging around, are sitting there just waiting for the next tweet to move things and hope that you can trade off of it. And this is where I say you got to have a real strategy in place, right? Maybe you've made some money and you want to know where you can park it, what you can do with it, DeFi yield projects you can get involved with, staking pools, even liquidity pools, right? If you want to go that route. And there is an education that's available for you that can help position you and your portfolio in a more diversified way. I need you to listen to this right now.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt. So this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today. And it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.